Jim, thanks for joining us this Thursday.
Hi, Daniela. Always nice to be with you.
All right, Jim, let's start with the trending story of the day. Argentina defaulting for the third time in 28 years. It happened. They defaulted. Some analysts I spoke with earlier this morning shrugged their shoulders and said, look, Argentina has a history of defaulting. How do you see it here, Jim?
Well, Daniela, I think the marketplace, as we speak now, is not taking the Argentine debt default as a major element in price action today. But it is a bit unsettling, and it's things like that can spread into other more serious developments. So I think the marketplace is going to keep an eye on that. Also, overnight, it was reported that the Portuguese bank that was rumored to be in trouble last month had very poor earnings. So, that's another background factor that could come into play on risk aversion. Could support the gold market at some point.
Jim, let's talk about the Dow hitting triple digits now following the jobless claims. Another better than expected number here, Jim.
Well, Daniela, the jobless claims number, Wednesday's GDP report, that's strong data, stronger than expected data, and you may be seeing a buy the rumor, sell the fact situation in the stock indexes, whereby the selling off on good news.
Jim, over to Europe now. What can Mario Draghi do to prompt the European economy? The unemployment rate fell in June, but it is still near the record high of 12%. Also, in a surprise turn of events, the inflation rate fell this month as well. Can he do anything here, Jim?
Well, the inflation figures we just saw on Thursday were the lowest CP consumer price index reading since 2009, and that plays into the hands of the ECB wanting to continue its very easy money policy to stimulate growth and to ward off deflationary price pressures. So, their work's cut out for them, but I think that falls into the camp of the monetary policy doves that want to continue to see easy money coming out of the European Union.
On that note, Jim, let's get to your Wyckoff market reading for gold and silver. Gold struggling for the third straight day.
Yes, Daniela, we see a 4-week low in the gold market. I'm giving it a Wyckoff market rating of 4.0. That's into the bearish camp. Prices are in a 3-week-old downtrend on the daily bar chart. We've got overhead resistance at this week's high of 13.1210. Got solid support at 1278. Now looking at December COMEX silver, I've given it a Wyckoff market rating of 4.0 also. We've got solid overhead resistance at $21. Technical support at the recent low of 2042.
Jim, thanks so much for your thoughts.
Thank you, Danielle, and can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking. We'll have more for you in the meantime. Email us at newsfeedback@kitco.com. Thanks for watching.